Are you serious? Are you serious, folks? Welcome to another powerful edition of the Coming Apocalypse. Of course, you talk about apocalypse. Well, there's some things we got to watch for. Have you ever heard of a black swan event? Well, global financial crisis is something that's being talked about right now. We got to get ahead of that. We got to be smart about it. And the best guy you could bring in to get ahead of all of things that's going on, and not just get ahead of it, but to capitalize off of it. You can. Let's bring in Colin Plume, CEO of NobleGoldInvestment.com. Colin, how you doing today?
Pastor Paul, always a pleasure. Good seeing you, and nice to be here.
It really is great to see you. You are a busy man. I see you everywhere now. I was watching the NFL Network this morning, and there's Colin Plume. He's everywhere. He's at Fox. He's everywhere. So that's really good. It's really good. I'm glad to see it.
I do a little moonlighting.
I know. I see that. I know that. And I know you got a family, and I mean, I don't know how in the world you do it, brother. Keep it going.
I got a rocket, Pastor Paul. You have no idea.
Yes, you do.
Can't take a hit, but I got a rocket.
There you go.
No, everything is good. Yeah, I mean, it's a unique time. And starting out, you were talking about Black Swan event. So here's what we got. We have an inverted yield curve right now, which for people that don't know, basically you have 10-year notes, 10-year bonds, and it's unusual for a 10-year note, right, to drop and be at a lower yield than a 2-year note, because logically you don't want to tie your money up for a long time, right? And
right.
If you can make a bigger return, you're gonna do that. So that we've had this the opposite of what I just said. The 2-year is higher, and so it's inverted. And so basically, what that tells us is that bond managers out there, and for people that don't understand, the largest money in the world, BlackRock, endowments, all these people, they're 0.1% for them is huge when you're trading trillions of dollars. So
right.
When you see an inverted yield curve, what's happening is that they're too concerned to keep money in that short term. They actually would rather have a lower return in a long-term vehicle, a 10-year vehicle, which is a long time. And, there's 20-year bonds and 30-year bonds too. But it's typically a sign that the smartest people in the world, and these bond managers are the smartest, because when you're trading trillions of dollars, you have to be 6 months out, 8 months out. You really have to be prepared. And so last time we saw this happen very heavily was in 2019, actually. We saw this inverted yield curve in August. And so there's a lot of things coming out now where people have come to the table and believe that there was very, very wealthy, very powerful people that knew about what was going on with the virus. They knew it was going to create havoc in the markets. And so you saw this inverted yield curve in 2019, August, which was quite surprising. I mean, everybody remembers 2020 and how things kind of fell apart. But what that signal is that this big money really knew that there was going to be a problem out there, and so they wanted to get into some really safe assets.
So they got out ahead of it. They knew there was this catastrophic look. Right. They didn't know how bad it would be, but let's just say they knew it was going to be bad.
Right.
With the pandemic. So what they did is they jumped ahead early and secured money long-term protection.
Yep. Correct. And so August 2019, we're talking about 6 months before anyone else, even really heard about it. So let's say maybe you started to catch it on the news, maybe like early February, end of January, you started to hear about it. I mean, they were 4 or 5 months before that. They kind of knew what was going on and started to get, really safe. Then there's some congressmen too that sold all their positions. I can't think of the name. There's one famous one that he sold every position in the stock market and went strictly in the 10-year treasury for safety. So that was the last time we sort of saw that happen in a large way. That's happening right now. If you can Google 2-year to 10-year notes, and you'll see there's a significant difference there. And so that's typically a sign that the largest money in the world fears that there's a recession coming.
Mm-hmm.
So they're going to get real safe.
Did the same thing happen, Colin, just before the S&L crisis of 2008?
I think so. Yeah. I mean, there's been a number of times it's happened. I'd have to look at the charts to see all the different times it happened. But the one thing I will tell you is that in the last 60 years, every time this has happened, there's been a recession. There's only been one time, I think it was, I can't remember the exact date. There was somewhere in the 90s that it happened and that we didn't see a recession happen immediately. But every other time, this is typically the indicator, which sort of goes along the lines of that, these big companies that are investing, they need to get ahead of stuff. And so they believe that that's going to happen. Now, so what would change? How would the yield change out there in the market? And one of the ways it would change would be if we lowered rates. But it doesn't look like we're going to lower rates.
No, he's actually going to raise it again. That's what I'm hearing.
Yeah. So unless there's some kind of black swan event, that's sort of how we started. So unless there was some reason that Powell had to lower rates, or he was forced in a position, so there was some kind of catastrophic event or war or something,
right,
that maybe could shift things where he would have to move in that direction. Otherwise, this inverted yield curve is probably going to stick for a while. And then usually what happens is it starts to shift and that gap gets really small. And then typically that's when you see some type of recession happening. And a lot of people believe we've been in a recession for, over a year now, but the typical indicators are different, right? Because unemployment, they say, is low. So, and so that's one of the indicators that, typically has to go up really high for them to say we're in a recession. But I think that Powell's got a real problem when, his mandate is to get back to 2%. He's raising rates. So unlikely under his term, depending on what happens in the next election, speculation who will be there. And so, it's signaling to the markets that we're not going to have a soft landing. That's not going to happen. That's what this inverted yield curve typically predicts. And it's all probability, right? But it's been
basically, it's the pattern that has worked primarily. It's like 3rd and 8, you're probably going to pass. Okay. Right. Okay. It's 3rd and 8. You're probably throwing the ball. May not. You may do a draw play, but it really looks like a pass coming. So
not to segue, but I love football, and I watched a clip of Larry David talking about, he got interviewed on Rich Eisen's show, and he was like, "What would you do if you're the commissioner?" And he's like, "I get rid of all the kickers. No kickers. I don't understand why they're on the field."
Just go for 2-point conversions every time, right?
He said, just go. Everyone should just. He's like, they're not even athletes. Why are they even on the field? He was ranting about. And I agree. I don't know why there's kickers out there deciding the whole game is this one guy.
One guy. He might be a soccer player from Australia. And he's going to come in and kick a 55-yarder. Yeah. And all these gladiators have been pounded and grounded, and then it comes down to this one kicker.
Yeah, this one guy that's been drinking coffee on the sidelines for 45 minutes. Yeah, so it's an interesting time when you have these types of things happening in the markets, and I think it's a wonky market. I don't think people really feel comfortable. And so I just I look at these events and I go, wow, this is a very interesting time right now. Elections coming. What's going to happen? What's
the common guy like me? Okay, what the folks watching out there. So we're hearing you. You're ahead of the talking heads. The media is not going to say anything about this till it's too late. Like it crashed or something happened.
Yeah.
So you're watching to get out ahead as well for us. Am I right? So what's your
and also I wanted to talk too about these target rate funds that are out there. There's these funds that and I've been against this for a long time, but people buy these target rate funds for retirement, and they're supposed to sort of mimic what you're supposed to do out there and take the guesswork out of it. And I'm going to tell you guys right now, you have to be the captain of your own ship in this type of economy. Right. There's no financial advisor that's going to be able to get you out all of this. And I've seen financial advisors recommend these. So they're funds that are supposed to, take some of the risk off the table closer to retirement. But I can tell you right now, they're not. They're actually very heavy in equities. A lot of the ones that I've seen, heavier that I've seen, which is quite surprising, because if you think about it, this is some of the best bond rates that we've seen in, I don't even remember over 20 years ago. And yet, if you look at a lot of these target rate funds, and if you have this, you should look at it and look at your allocation in there. But I've seen target rate funds that are still 50% equities or higher, even in this market. And yeah, I guess, if you're 20 years out, maybe, right, you're okay.
Right.
But if you're like 5 years out,
no,
and we're gonna be bumpy for 2 to 3 more years, it doesn't make sense to not take advantage of some of these rates. So it's an interesting time to look at those things, and that's why 10% gold, silver. If you don't have some precious metals right now, because what is that black swan event going to be? I mean, we're sort of in a war already. Is it going to be a full, financial collapse? Is it the commercial real estate market that's going to collapse?
I tell you, I'm concerned about, I'm down here in the Villages where they were, selling houses like, well, I tell you what, you could put 2 years ago, if you put your house up for sale, you would get 15 bids on it in 2 days.
Right.
Okay. And a lot of them were cash bids. Today, I've just talked to a realtor who was selling 16 homes a month, now selling 2 a month.
Right.
Part of it is they can't sell it because the interest rates went so high that if a person did want to buy it, they look at the price, they look at the interest rate and say, I can't do that.
Yeah.
And it's stalling, it's slowing everything down all the way down the chain.
Yeah, Pastor Paul, it's funny because I see a lot of these real estate professionals, and obviously they have to try to sell homes. But I see a lot of times they say like, well, just buy it now and then the rates will go down. And in theory, like if the house dropped in price, okay, that you could maybe make that. But first of all, the houses have not dropped that much.
No, they haven't.
So that already is not that great of a deal. And the second thing, a lot of people just can't afford that higher mortgage. It's not even that. It's not even them saying like, I don't want to move into that house. They do. I mean, everybody wants to move into their dream house.
Right.
They legitimately can't, there's a formula. It's supposed to be, the mortgage is supposed to be less than 33% of your
total income, right?
Your total income. And it's not right now for a lot of people. So they can't even feasibly find a way to get into that.
And then you throw that interest rate on top of that, and it's like, I can't do that.
Yeah.
And then the homeowner who wants to sell the home, he's forced to then drop his price to compensate for the interest rate. Right. And at some point he says, no, I'm going to wait it out. I'll just stay here. And
or
so
I'll rent it.
Okay, but here in Florida, there's a massive need for homes. So they need them, but they can't afford them. But they got to have them, yet they can't afford them. So I mean, and then the guys who would like to buy them, who could afford them, can't sell their house in New York because the interest rate's too high. Nobody can buy theirs.
Right. No, absolutely. Yeah, I mean that's always been the sticky thing about like thinking about your home as an investment. In that, most people move to a place and then they get comfortable and they like it there and they build a community there.
Right.
And then you're like, this is my big investment. What am I going to do? I'm going to sell this. Where do I go? Because you got to go somewhere that's less expensive.
Right.
And a lot of those less expensive places are not less expensive anymore.
Right.
Florida was one of them. That was a very affordable location. Not to segue, but just stay on real estate. I don't know if you've been seeing what's happening in China. China's, they have a very similar economy for middle-class people where a lot of their net worth is in their homes.
Okay.
And the market in July in China, the residential market dropped by 9% in 1 month. The residential market dropped by 9%. And they are really, that Evergrande, that large real estate company, they went out of business.
Yep.
They're right now, you're seeing a real problem. They thought, China would be kind of heading the way here in this and pulling us out of it. But they're really struggling. Their export import numbers are not great right now. So they're having a major issue. But
I think India, this meeting they just had, the G20, they talked about putting together this new railway from India to Europe, through the Middle East, through Saudi Arabia and Israel and what have you, and kind of bypassing China. In other words, India is wanting to take over the market that China has had.
Yeah.
And they've caught China right now at a time when China's, like you just said, this drastic drop.
Right.
So what's causing it in China? Is it just unemployment, slowdown?
It's unemployment. Yeah, it's unemployment. It's just they've overbuilt in a lot of cities. There's empty cities there that they've tried to do. And, and I think overall the economy is just a little bit slower. I mean, obviously we're a big consumer of their goods and things have slowed down here. So, our consumption is down. So that's going to have an effect on them. But yeah, just overall, just rates, inflation, they've just seen a dramatic pullback in their market. And you're right. They there's been a lot of India-China conversations, but there's been some rifts there between those two countries. And actually the one of the things that, a lot of people will talk about is what's been going on with the BRIC nations and them creating their own currency. But if China and India can't get together and agree, I mean, the two of the 5 biggest economies in the world, there's no gold.
It's not going to happen.
Yeah,
and Russia's at war, and they they can't throw too much money into the BRIC system. So I think that's going to stall. Going to stall.
Yeah, I mean, I think there was some momentum on them creating that currency, and I think they want it. But I think that China and India are basically at a stalemate right now.
Right.
And they're not, they're not working together. Sidebar, China just had a massive buying spree of gold. They are just continuing. And it's funny, after all this, they're not doing the currency. China and India, I think, are the 2 largest buyers of gold this year.
Okay.
So even though they don't have this currency right now, and maybe it's in a year or 2 years down the road and they're just getting prepared, or they just need gold, they are
to prop up their currency values. They got to get some gold.
Yeah,
right.
Absolutely. Yeah. I was talking to a friend over the weekend who's a jeweler, and he was talking about jewelry demand, and obviously on the industrial side for gold, that is a big component of it. But there's new uses he wasn't even aware of. There's all these medical uses that are coming in. Obviously, all the technology we're talking on. 10 years ago, 82% of gold consumption was jewelry, but now we're in the low 70s because there are other uses coming to the forefront. And that's just the industrial use. Obviously, when you have, countries like China, a lot of times they're just holding gold, they're hoarding it. They're not really looking to liquidate it.
Right.
So the gold market's been quite interesting this year. You had Turkey sell some gold for 2 months and then double up and rebuy back into the market. Which is quite interesting. So I think you're seeing a lot of central banks that are looking at the markets and saying, well, listen, we have some debt, U.S. debt, right? How much of that do we really want? Let's look at some other options out there in the markets. And obviously nobody feels great about real estate right now, and they think that's going to take many years to recover, and it will. Like what you were saying. I mean, just talking about how they need homes in Florida because there's a big exodus to Florida.
Right.
Imagine if a residential loan's at 7.5%, the debt to build homes, right? That debt is at a whole higher rate. I mean, we're
a lot higher,
14, 15% to be able to do that. It's probably higher in some places. So that debt makes it quite expensive and dangerous. Where those, you could get before this whole rate increase, you could get loans below 10% to build.
Right.
So you have these major corporations out there that do want to build, but the cost is higher. The cost of the lumber is higher. The cost of the labor is higher. Everything's higher. But they know deep down right now, even if they build a home in 6 months, there's just not enough people that probably can afford that home
right
now.
They'll have to price it at a price higher than they wanted to, and then they got the interest rate. And then you got Powell saying I'm going to go higher.
Yeah,
I mean, he's killing us. I mean, basically, he would almost have to drop this thing back to zero, like fast, if you want to keep it from stalling this economy.
Yeah.
I mean, wouldn't he?
Yeah, 100%. That would be the only that would be the only way we don't see commercial real estate collapse. That's the only.
So he's got to know this. I mean, this guy's
got to know.
He's a genius, right?
So yeah, so that would be the black swan event next year. That would help us avoid. That would change things. That would be a big change. If it doesn't happen, then you're definitely looking at most indicators say we're looking at a recession.
Yeah,
it's going to be tough out there, and so that's why people are taking a little money off the table. I've been getting in a lot of interesting conversations, family offices, people that want to talk to me about where things are going and what we should be doing.
Right.
So we've seen a big change in the client base. Not that we have regular people too, but we're seeing a lot of high net worth family offices, 50 to 100 million and higher, that just want to know about what we do, how liquid it is. That's a big question we get a lot. And it's like, they're just amazed how liquid gold is. They love that flexibility that we have, that you can get in and out of it, whatever, because that's what they want a lot of times, these family offices. So, they're going to have some of their money in these 10-year treasuries for safety, but then they need stuff that they can move in and out of. If the
market change, they need to have some flexibility.
Exactly.
So they're looking for stability and flexibility.
Correct.
Okay.
Yeah. That's the big conversation, is like, how quickly can we move in and out of the metal?
Yeah.
And that's the great thing about gold and silver, with us. And really a lot of it is because Noble Gold has always focused on bullion, coins, and bars. We have those liquid assets. And I think, unfortunately, a lot of people that got into high price coins over the last few years, a lot of our competitors sell these high price coins. They've been really hurt because right now we're in a soft market. Products are less than they've been since pre-pandemic. Bars and everything, we're getting great, unbelievable pricing. But people that bought American Eagles, for instance, or some of these products that were, at one point, American Eagles were $10, $11 over the spot price. That market's just decimated now. And so even though gold and silver may have gone up since they bought it, they may have not been able to recover and really have a profit. That's why what we've done, and that's why we've streamlined it, is bullion, coins, and bars, because those get the best, you're going to get the best bang for your buck and best return over time. And that's what we've always focused on, is these, just getting a lot of weight of metal. So, I've had conversations with people that, they don't understand why gold's gone up and they haven't had a return in some with other companies, because they bought
the wrong coins. They bought the wrong coin. I had some people at church yesterday that walked up and we were talking, and they said, "Hey, just want you to know, we bought some silver from Noble Gold. We really appreciate it." Said it was easy. They were friendly. The silver was delivered on time. We just wanted you to know, Paul, that thumbs up to him. And that was funny because I said, "Well, great, because I'm going to be talking to Colin tomorrow," and I just let him know that. So it's good to know. I mean, because that's one of the things people say to me all the time. They'll say, "So can I get the gold or silver tangibly myself? Or do I have to put it somewhere?" Or and I said, "Well, it depends what you want, and Colin can help you. You may want it physically in your hand, and you might want Noble Gold to hold it for you." Is that right, Colin?
I like it both ways. I like having some, and I like having some stored. I like to do it both ways. I like having some in my IRA because it's tax deferred, and it's just kind of, that's going to be there for a long time. And I also do like having some, at my house. And so you're right, Pastor Paul, everybody's different. We've shipped millions and millions and millions of dollars. Well, at this point, we've shipped over $1 billion in gold, but it is great when somebody, I love when somebody says they got it and they're happy. It's just the greatest feeling for me.
Feels good. Yeah. It feels good to have people.
Yeah. It's just good to do, you get the quick transaction. They get, they send money and it's like, oh, when's it going to come? And then, it shows up a few days later.
So have you seen a trend of more the average person like myself, let's say, that are purchasing gold and silver? Is there a trend going up here in the last 2-3 years on that?
Yeah, I
How's
think what I've found is, people that contacted us a few years ago, that took some time, and people take time to make financial decisions. A lot of those people, like people that, some of the customer service people, like, "Ah, I talked to this person a few years ago, and we exchange emails." And then the last like 30 days, we've seen a lot of those people that just took them a while to get comfortable. And now they kind of see what's going on. And I also think a lot of them thought the equity markets would be bouncing back by now. And so they wanted to see, what was going
yeah,
to happen there.
yeah,
So we've seen a lot of those come to the table and purchase. And then referrals, our referrals are a very high, big part of our business. And so we've seen a lot of friends or family
yep,
members get referred in. So that's always great, for us to
yep,
know that someone would feel comfortable to send our name
yeah.
to somebody else.
So there you go, folks. And diversity is the key here. I mean, because and then you've been preaching that forever, and that around. I think the magic number is 10%. I hear, give or
That's what
take.
most financial. I mean, I'm not a financial advisor. I can't give finance, but that's what most people do. I have some people that do more, some people that do a little. It's just like you said, it's exposure, right?
Yeah,
You're exposing yourself, and it's the nice thing about gold, it's just outside the markets, it's outside the control, and so people want something that's a little bit outside of those markets because as we know, things are so manipulated now,
well,
and for
we got fiat money, we got digital money, and then I always say to people, but gold is a biblical currency. Okay,
right.
that's been around and it's not going anywhere. Matter of fact, if you get to heaven, that's the streets of gold. I mean, it's not going anywhere.
Yeah.
So it's something about knowing that gold and silver gives you that, and these precious metals gives you that confidence that okay, we got a certain amount put away here in a precious metal that it's not going to get dictated by any crazy stuff. If anything, if it gets crazy out there, it goes up.
Yeah.
Gold
It's
actually,
when things go bad. I mean, that's what you saw during the pandemic. Obviously,
yep,
everybody was rushing to gold. And you saw a lot of bond managers rushing to gold. That was the big talk on the street was, they couldn't get a return then. So they were looking at gold and they like gold. One of my friends, a big bond manager, and he does endowments. And he was like, preaching to me about gold. I'm like, I know about gold, but he was preaching to me about it.
right.
So it was quite interesting, kind of hearing that from someone that like literally day to day is trading, I mean, millions and millions of dollars in bonds. He was really pushing it. And so, we've talked about this inverted curve and, what's happening in the markets. And I'd say, the beauty is with us, we're here to help you. We're going to be there buying and selling. But, with gold and the IRA, it's for people that want to take control, that they want to be in the control of what they're doing. You're in control of the IRA. You make the decisions. And in my opinion, right now, that's how you have to run your finances. You can't trust anybody. You got to be watching, especially your, 5 to 10 years from retirement. You got to really be close.
Yeah.
Keep
You gotta have it close to the vest now. You can't be hanging out there in the wind when you're that close. And so
Correct.
people are concerned about their IRAs, their 401ks. A lot of folks are coming, folks, this is Colin Plume. Of course, and noblegoldinvestment.com. And we've been partners with them a long time.
Yep.
And you can trust them. That's what I want to say. You can trust them. You can pick up the phone. You can call them at 877-646-5347. You can see it going across the ticker there. So just call them at 877-646-5347. Go to the website, check it out. Colin's got a great team of people that will assist you and help you and walk you through it. And the folks, and now this was a person that actually walked up to me at church yesterday, had no idea I was going to be talking to you today. But Heidi gets emails all the time from folks who are saying, hey, thank you for, tell Pastor, thank you for letting us know about Noble Gold. Because everybody's concerned. A lot of folks, I know people who just sold their home who now don't know if they want to buy one or put the money somewhere kind of secure to maybe just rent for a little bit.
We get that call a lot. Yeah, we get that call a lot. Yeah, that and people do, decide to put some in a gold and silver. Yeah, people call us. I will tell you, and I'm only as good as my team, and I can tell you that, we had a retreat, recently with our managers and customer service, and I will tell you, like this is a very pleasurable group to be around. Fun,
Yeah,
interesting. They love metals. good sense of humor, just likable. This is a
Right.
likable group of people, which is really, part of our mandate at Noble Gold is that everybody gets along, because we want people to call in and enjoy the experience with us. And so I guarantee you'll like who you talk to on the phone. This is a really knowledgeable group about, and all the sales staff are all in this. They're all, invested
Right.
and stacking, and this is something they believe in. So it's exciting.
So it's a great company, folks, and it is something everyone should look at, is the diversity in your portfolio, in your retirement funds. You just need to look at it and say, don't ever put all your eggs in one basket. And everyone will say that, but in reality, because of this, look, 2024. Does anybody know what in the world's going to happen in 2024? We got an election. We got 4 trials. We got a black swan hanging out here somewhere. We don't know. We got a nuke flying from Russia. We really don't know what we got. 24 could be the year of unknown. It's the one year, if you're going to put some money into precious metals, I would say 2024 is the year.
Yeah. And we're in the 1900 range right now. So I think it's been flirting, broke 2000, kind of hovering around there. And then, I would say, don't forget about silver. Obviously, tons of uses for silver. And, there's obviously room for growth there. So, if anybody's looking, and we have tons of free information, even if you just want to call and ask questions, great. We'll send it to you. No pressure environment. We want you to feel comfortable. Read our reviews. I read a few this morning that I saw that I was happy with. And so anybody, check us out. I want you to. I know some companies want to rush you into stuff, but we don't. So
you want to build a relationship with people.
Correct. You're going to be with somebody for a long time.
That's right.
Buy gold and silver, you're going to do it for a long time. And so we want people to feel comfortable. And that's what I was saying. A lot of people that took them a few years, maybe they're reading the email, seeing the videos, and kind of now they're ready to go. So,
and people also bring this up, Colin, and that is, all right, Pastor, you're telling me I can go there and I can buy gold and silver, but when I need to sell it, who do I call?
Yeah, we're buying it back. Anything you buy from us, we're buying it back, and we'll buy it back from other companies too. But like I kind of earlier on, like a lot of these coins and stuff, people overpaid, and so that's the problem. They call us, they go, well, hey, I paid, and there's nothing we can do because we didn't tell you to buy those things. Anything you buy from us, we're buying it back 100%.
Right. So there you go, folks. And that's a good way to protect your money. And at the same time, gives you you have this flexibility. You have security and flexibility. That's why gold is a biblical currency. It's been around for 5,000 years. It's not going anywhere. And not just gold, as Colin said, but all these precious metals are, it's a good way to diversify. And if you're going to do it, go with noblegoldinvestment.com. And there's the phone,
absolutely.
There's the phone number. Call it on the right now, 877-646-5347. And Colin and his team will take care of you. I guarantee it.
100%.
You're really helping me. You're giving the people some good advice and just getting out ahead of it. I think this call was timely because I think we really do need to know going into this fall, going into this third quarter, that always is a tricky time for some reason.
Yeah.
So it's good to be out ahead of it.
It's good to be a few days early than a few months late, unfortunately, on some of these things. So, we're available. Free guides, good information. Thank you, Pastor Paul. Always a pleasure to get on and chat it up with you. Looking good, and God bless you. And I hope
Thank you. Thank you so much. Thank you for being a partner with us with our ministry. We really appreciate it, Colin.
Absolutely.
Really, we do.
Yeah.
All right, folks. That's Colin Plume. He is the man over at noblegoldinvestment.com. Pick up the phone. Call him today. You may have some questions. You need to get started. Go to noblegoldinvestment.com. And we'll be talking to you next time right here on The Coming Apocalypse. Colin, we'll see you. Hang on, Colin, for a second, okay?